Kia ora, I'm Bernard Hickey for The Kaka. This is my daily chorus podcast and video that goes out with my email newsletter via The Kaka, which is a Substack. I look at Aotearoa's political economy around housing, climate and poverty. Today I wanted to talk about the appointment yesterday of Anna Breman as the new Reserve Bank Governor. She has been the Deputy Governor at the Riksbank, which is the Swedish central bank, for the last 3 years or so, and has a PhD in economics and has worked at the World Bank and elsewhere. She was appointed by Nicola Willis yesterday, and they appeared together in a press conference at the Beehive to talk about the appointment, which is of the first woman as a Reserve Bank Governor. Now, in that press conference, Anna Breman talked about her role, which, as she rightly pointed out, is prescribed by the Reserve Bank Act to be all about being laser focused on keeping inflation low and stable. Now, it wasn't always the case for the Reserve Bank. There was a period of about 3 years under the previous Labour government when it had a sort of a dual mandate. So instead of being a pure inflation targeter, which New Zealand is famous for inventing, it also had to take into account the effect of monetary policy on creating maximum sustainable employment, which is a curate's egg of a thing where you can sort of decide what you think is a sustainable level of maximum employment for yourself. And the Reserve Bank argued that it didn't actually change much about how it was running monetary policy. However, it does mean that when it's a tight call and you're forced to focus on something, then often if you've only got a single mandate, you focus on keeping inflation low, which means you're perhaps happier to run unemployment a bit higher than would otherwise be the case. So let's have a look at what's in front of Anna Breman and what is likely to be the outcome from a political economy point of view. So there we have Anna Breman talking about what she's doing yesterday, laser focused. And she's going to look at that. For Nicola Willis and for Christopher Luxon, it's going to be less perhaps joyful as they might have expected, or some might expect, because even though Anna Breman is the Reserve Bank Governor, unlike in past times under the Reserve Bank where the Governor, him or herself, was the sole decision maker on monetary policy, that's no longer the case. Initially, under the previous governor, Adrian Orr, it was formalised that the decision would be made by a monetary policy committee. It was set up in an informal way by Graham Wheeler, who was before Adrian Orr, but it was formalised under the changes made to the Reserve Bank under Labour. Now, those changes were reversed when it came to the maximum employment mandate, but they weren't when it came to the issue of a monetary policy committee. So with 6 members, she's just one of the decision makers. And with the government looking to see significant cuts in the official cash rate, simply appointing Anna Breman to the Reserve Bank doesn't necessarily buy them that. Also, because it's now just a single mandate that the Reserve Bank is back looking at, there's less wriggle room for it to cut. And remember, inflation is already close to the 3% peak of the band. Now, in theory, the Reserve Bank looks 18 months ahead. But with that stubbornly high inflation, I would argue in part because of the various fees and charges being pushed through by central and local government, in large part because of the government's drive to reduce debt and reduce deficits, that the Reserve Bank when push comes to shove, is going to choose low inflation rather than low unemployment. Now, the other thing that's bubbling along here is that the Reserve Bank is currently reviewing the capital rules for banks. You might recall Adrian Orr wanted to increase the capital requirements for banks, effectively reducing their leverage and reducing their ability to pump lots of extra credit into the economy. And there was still another tranche of that capital upgrade, if you like, still to go. The government and Parliament, the Select Committee, the Finance and Expenditure Select Committee, required that there be a significant amount of loosening there. And under the acting governor, there was a review, and now the Reserve Bank is considering its final decisions on a loosening. Now, the question is, will Anna Breman agree to that? Now, she is actually a lot more powerful in this case than she is with the official cash rate, because this is an agreement between the Reserve Bank and the government, and the Reserve Bank is responsible for prudential supervision. And interestingly, Sweden has banks which have a lot of capital, in fact, just as much as the toughened rules that are in place in New Zealand. So that may not be the boost the government wants. Now, the government obviously needs a much faster period of economic growth. It needs the housing market to fire up. And one way to do that is to cut interest rates and to loosen capital controls, allowing the banks to lend more for each dollar of capital they have. Now, the other thing that's worth pointing out today is that the Auckland Council decided last night in an 18-5 vote to get rid of Plan Change 78, as was expected, and to replace it with Plan Change 120. You may argue, who cares? Well, Plan Change 120 is the densification plan, which allows high rises near train stations in suburban areas. It replaces Plan Changes 78, Townhouse Nation, 3 stories, 3 townhouses per section. That was forced through by the government. And now it goes back to an independent hearings panel, and Chris Bishop has made clear that the council will get the final vote on whether this actually goes into law, and that won't happen for at least 18 months. What it means, though, is that the combination of events and the timing and the debate that's blown up around densification is that it looks like the election is going to be a referendum on densification, and just reinforces how the lack of agreement between councils and government on population growth and on how to handle all this population, the lack of agreement based around the disputes on how money is raised and who benefits from migration, without a settlement of that dispute, and we still don't have one, or any sort of social license or agreement from voters and ratepayers that population growth, high population growth, is what people want. Without that settlement, it's very hard to see a solution here to quickly get lots of housing supply. And just a final thing here that I've spotted in the last day or so, Transpower came out with an interesting research note yesterday showing that the new and biggest battery created in the last year at Ruakaka by Meridian has been able to suck in cheap power in the middle of the night and then sell it back into the grid when things are expensive. And it turns out, after Transpower's analysis, that, as you can see there, on the left-hand side, the prices, some of which are very high. On the right-hand side, not so high prices. So it turns out the batteries help lower lower prices, which is great news. And just quickly in the papers today, the Herald's leading with those film studios being bought by some film stars, and reports on Nicola Willis's comments yesterday to the mood of the boardroom. I'm Bernard Hickey. That was today's chorus for Thursday, September the 25th, for paying and non-paying subscribers to the Kaka. if you like what you're seeing here and you want me to keep doing it, please subscribe via the Kaka on Substack. Ka kite anō.